This week, silver deliveries shifted earlier than usual. The timing caught desks off routine expectations. Quietly, no prices surged yet. Attention moved regardless internally. Calendar effects quietly influenced liquidity across participants globally. These are the moments serious investors should notice. Not excitement, just structure revealing itself briefly. Now, understanding mistakes requires observing these timing distortions carefully. First mistake begins with mistaking headlines for signals. Recent coverage emphasized movement without explaining underlying mechanics. When reports arrive during thin sessions, interpretation skews, liquidity changes alter meaning without changing observable prices. Mistake occurs when timing context gets ignored entirely. Market structure matters more during calendar transitions periods. Second mistake involves confusing positioning with conviction levels. Reports showed adjustments driven by mandates, not beliefs. Funds rebalance for rules, irrespective of narratives present. Misreading this leads observers toward false conclusions about positioning snapshots, lack intent, absent timing, interpretation frameworks. Third mistake centers on storage and delivery assumptions. Recent logistical notes highlighted shifting warehouse behaviors. Recently, inventory reports reflect timing conventions, not availability levels. Observers sometimes treat administrative timing as scarcity signals. This misinterpretation distorts assessments without price confirmation today. Fourth mistake arises from overlooking financing conditions. Cycles, lease and funding nuances quietly influence participation windows. When financing tightens activity, shifts without announcements often. Recent market notes reference such adjustments subtly today. Ignoring these leads to misjudging engagement levels overall. Fifth mistake concerns tax and reporting calendars, interactions, end year. Mechanics shape flows without directional intent. Recent filings reminded participants about timing sensitivities again. Activity around deadlines reflects compliance, not outlook changes. Mistaking compliance flows for sentiment misleads observers consistently. Across all mistakes, timing remains the common thread. Silver markets communicate quietly through structure and timing. Price alone rarely explains what just occurred recently. Present developments show why patience truly matters. Serious analysis respects calendars, behavior, liquidity, interactions. This perspective reduces noise without forecasting outcomes. Understanding mistakes supports better interpretation over time. The discussion here remains educational and observational only. No guidance is offered regarding specific investment actions. Thoughtful viewers value calm analysis over excitement always. If this approach resonates, consider following future discussions. Engage respectfully and share insights without expectations. Attached market participants often respond to incentives, not stories. Incentives shift subtly around reporting and settlement dates. Recent settlement alignment illustrated this dynamic clearly today. Observers benefit from mapping actions to constraints present. Constraints include balance sheets, regulations, and liquidity access. When constraints bind, behavior adapts without commentary public. Such adaptations appeared in recent transactional data streams. Reading these requires discipline rather than speculation habitually. Speculation distracts from understanding operational market realities. Operational realities govern flows more than opinions. Often, recent communications hinted at such governance mechanisms. Mistakes arise when observers overweight narratives. During narratives arrive conveniently while data arrives delayed, sometimes. Delays complicate attribution unless timing is respected consistently. Respecting timing means waiting for confirmations. Proper. Confirmations include settlements, inventories, and filings. Patterns emerge slowly, requiring sustained analytical attention. Analytical attention distinguishes observers from commentators frequently. Commentary often emphasizes immediacy over accuracy. Today, accuracy improves when calendars anchor interpretation properly. Anchoring interpretation reduces susceptibility to noise effects. Noise increases during transitional market periods, especially recent transitions, provided a practical reminder here. Reminders help refine frameworks without changing convictions. Frameworks guide observation, not decision mandates directly. This distinction preserves objectivity and composure consistently. Composure allows learning from subtle developments. Ongoing, subtle developments often precede widely noticed changes. Noticing them depends on disciplined review processes. Disciplined review separates signal from coincidence carefully. Coincidence appears persuasive during quiet markets. Sometimes. Quiet markets still contain informative microstructures within Microstructures reveal participation without promotional messaging attached. Promotional messaging distracts from measurable behaviors. Easily, behavioral evidence accumulates across routine processes daily. Routine processes include clearing, reporting, and custody. Each process carries timing. Conventions worth understanding. Understanding conventions prevents mislabeling normal adjustments frequently. Normal adjustments appear dramatic without proper context. Context comes from calendars, rules, and incentives. Recent market activity illustrated these relationships clearly. Illustrations matter because memory shapes future interpretation. Future interpretation improves when lessons remain grounded. Grounded lessons resist emotional overtones during commentary. Emotional overtones reduce analytical clarity over time. Clarity supports consistent review across cycles smoothly. Cycles progress, regardless of individual expectations held. Expectations often misalign with structural realities temporarily. Structural realities persist through narrative shifts unnoticed. Unnoticed persistence rewards patient observation. Methods alone. Observation methods improve with deliberate practice. Over time, deliberate practice involves reviewing outcomes calmly periodically. Calm review avoids reinforcing recent biases unnecessarily. Recent biases often stem from timing, misunderstandings. Correcting misunderstandings begins with acknowledging limits openly. Limits include incomplete data and delayed reporting. Acknowledging limits fosters humility and precision together. Precision emerges from careful synthesis over time. Synthesis integrates timing, structure, and behavior coherently. Coherent integration reduces reliance on sensationalism entirely. Sensationalism adds heat without illumination or insight. Insight develops through steady exposure to mechanics. Mechanics remain consistent even as narratives change. Change attracts attention, while consistency explains outcomes. Explaining outcomes requires patience and restraint consistently. Restraint avoids overinterpretation of short intervals within. Short intervals rarely capture full processes. Operating processes unfold across multiple calendars simultaneously. Simultaneity complicates simple explanations for observers, often. Observers benefit from separating layers analytically. First, layers include transactional, regulatory, and behavioral dimensions. Each dimension operates on different clocks concurrently. Concurrent clocks create misleading overlaps at times. Overlaps resolve once settlements complete across venues. Venues follow standardized yet staggered schedules globally. Global schedules necessitate cautious interpretation by observers. Cautious interpretation aligns with long-term learning. Learning improves when discussions remain measured consistently. Measured discussion invites thoughtful community engagement here. If you value this approach, subscribe thoughtfully. Share perspectives respectfully within the comments section. This channel prioritizes clarity over persuasion efforts. Persuasion is avoided to preserve neutrality. Always. Neutrality supports open-ended analysis without bias. Bias reduction enhances interpretive reliability across time. Reliability matters when reviewing evolving markets calmly. Evolving markets reward consistent frameworks over cycles. Framework consistency steadies perception during transitions. Again, transitions will continue without dramatic announcements, often. Understanding that reality supports disciplined observation habits. Disciplined habits develop through repeated review sessions. Repeated review refines judgment without haste. Gradual refinement aligns with responsible education goals. Education here remains informational and reflective only. Thank you for engaging with careful analysis. Continue applying patience when interpreting developments ahead. Developments deserve time before conclusions form. Naturally. Natural conclusions. Respect evidence accumulation over time. Time reveals structure better than immediacy often. With that perspective, remain observant and engaged. This thinning was procedural, not sentiment-driven. Mistakes arise when observers ignore procedural effects. Procedural effects alter flow visibility. Behavioral interpretation should follow constraints, mapping first. Constraints, mapping clarifies why activity clusters periodically. Clusters often coincide with operational batching schedules. Batching schedules reduce friction but confuse observers. Confusion increases when commentary ignores process design. Process design prioritizes efficiency over interpretive clarity. Clarity must be reconstructed through patient analysis. Patient analysis resists emotional response to anomalies. Recent anomalies reflected reporting cadence shifts globally. Cadence shifts occur around holidays and quarter ends. Quarter end mechanics influence balance sheet presentation. Presentation effects sometimes resemble directional repositioning signals. Signals inferred from presentation risk misclassification frequently. Misclassification undermines trust in analytical frameworks. Overall, frameworks must incorporate timing, liquidity behavior jointly. Joint incorporation reduces over-reliance on single indicators. Single indicators rarely explain multi-venue markets. Markets function as systems, not isolated prices. System behavior emerges through routine operational choices. Choices respond to incentives, constraints, and schedules. Recent scheduling adjustments illustrated this responsiveness clearly. Responsiveness does not imply expectation changes necessarily. Expectation. Attribution requires corroborating evidence from multiple sources. Multiple sources include settlements, inventories, and disclosures. Disclosures arrive asynchronously, complicating causal narratives. Construction. Narrative construction benefits from delayed judgment periods. Delayed judgment preserves analytical integrity over time. Integrity matters when markets appear uneventful externally. Externally quiet periods still contain informative shifts. Shifts manifest in settlement behavior and allocation. Allocation changes sometimes reflect optimization, not outlook. Optimization responds to cost structures and timing. Recent cost commentary highlighted such optimization decisions. Decisions misread as sentiment shifts by observers. Observer caution remains essential during interpretive gaps. Gaps narrow once reporting cycles complete fully. Completion reveals continuity rather than disruption, typically. Continuity underscores importance of resisting overreaction. Tendencies. Overreaction often stems from time-compressed interpretation. Compression is amplified by constant information flow. Flow abundance encourages speed over depth analysis. Depth analysis requires intentional slowing down processes. Slowing down enables alignment with market mechanics. Mechanics operate regardless of audience attention levels. Attention cycles influence narratives, not operations directly. Recognizing this separation reduces interpretive errors materially. Errors accumulate when timing literacy remains limited. Literacy improves through continuous exposure and review. Review should prioritize structure over narrative appeal. Appeal often conflicts with accuracy unintentionally therein. Accuracy remains the objective of this discussion. Discussion aims to refine observation skills only. No recommendations are implied or offered here. The focus remains educational, descriptive, and neutral. Neutral analysis supports durable understanding over time. Durable understanding helps navigate future observations calmly. Calm navigation distinguishes thoughtful market participants consistently. Consistency matters more than immediacy in learning. Learning compounds quietly through repeated disciplined practice. This part concludes emphasizing timing, awareness, importance. In the next continuation, analysis deepens further. Returning to mechanics highlights cross-border settlement nuances. Cross-border timing differences complicate aggregated interpretations. Aggregated views mask local operational frictions frequently. Friction presence explains staggered activity observations across venues. Venue-specific rules shape participant sequencing choices. Sequencing choices align with risk management constraints. Constraints differ subtly between jurisdictions and products. Subtle differences generate apparent inconsistencies externally visible. Visibility depends on reporting harmonization, timing standards. Harmonization remains incomplete across global infrastructures today. Incomplete harmonization necessitates cautious cross-market comparisons. Comparisons require normalization for timing and scope. Normalization prevents overstating divergences inaccurately during observation windows. Observation windows should match underlying process durations. Duration awareness anchors realistic expectation formation cycles. Expectation formation without duration. Context invites error. Errors repeat when lessons remain unintegrated. Systematically, integration occurs through continuous reflective review practices. Reflective review prioritizes process over outcome focus. Outcome focus alone obscures causality chains. Often, causality chains extend across multiple reporting cycles. Cycles overlap, complicating simple attribution models. Frequently, models improve when calibrated against structural constraints. Calibration reduces noise sensitivity in interpretation efforts. Noise sensitivity amplifies reaction during low liquidity. Low liquidity periods featured in recent sessions. Sessions coincided with regional holidays closures internationally. Holiday effects compress participation without directional intent. Intent attribution must consider such seasonal factors. Seasonal factors recur annually, providing comparative baselines. Baselines help distinguish routine from exceptional behavior. Recent behavior aligned closely with historical baselines. Alignment suggests continuity rather than structural change. Such observations reinforce cautious interpretive discipline standards. Discipline underpins the analytical ethos here consistently. If this measured approach adds value, consider subscribing. Join a community focused on structure over sensation. Engage respectfully, sharing insights grounded in observation. Recent trading windows showed narrower participation ranges. Ranges reflected access limitations, not conviction changes. Liquidity ebbs around settlement preparation periods routinely. Participants prioritize balance sheet efficiency during such windows. Efficiency adjustments appear as reduced displayed interest. Displayed interest differs from underlying intent materially. Mistake occurs when observers equate visibility with activity. Visibility depends on quoting obligations and incentives. Incentives shift subtly around reporting and clearing cycles. Recent cycles overlapped, creating temporary participation shadows. Shadows confuse analysis. Absent liquidity, context, awareness. Liquidity context includes who can act when. When access narrows, prices reveal less information. Less information increases noise within observed prints. Prints alone cannot describe market state reliably. Reliable interpretation requires combining multiple operational indicators. Indicators include funding availability and margin usage, recent margin disclosures, suggested routine seasonal adjustments, aligned with calendar expectations historically observed. History here refers to operational patterns, not prices. Patterns repeat without implying directional outcomes. Another mistake involves ignoring internal netting processes. Netting reduces external flows while maintaining exposures. External quietness misleads observers about engagement levels. Engagement persists internally through offsets and reallocations. Reallocations optimize costs under timing constraints. Constraints intensify near cutoffs and holidays. Recent holidays compressed timelines across major venues. Compression forced participants to sequence actions differently. Sequencing differences altered apparent order flow patterns. Patterns misread as preference shifts by commentators. Commentators often lack access to internal mechanics. Mechanics remain unseen yet decisive for flow timing. Timing determines when intentions become observable publicly. Public observability lags private decision processes. Lag awareness prevents premature narrative construction errors. Errors proliferate when immediacy dominates interpretation culture. Culture rewards speed over depth. Unfortunately, often, depth demands patience and respect for process. Process includes clearing custody and collateral logistics. Logistics drive many short-term market behaviors. Behavioral inference must account for these drivers. Drivers operate regardless of macro narratives circulating. Circulating narratives distract from measurable operational facts. Facts include settlement calendars and inventory reconciliation. Reconciliation delays can temporarily distort reported figures. Figures stabilize once. Reconciliation completes. Normally, stabilization confirms continuity, not disruption. Typically, mistakes arise when stabilization is not awaited. Awaiting confirmation aligns analysis with reality. If you value calm, structured market discussion, consider subscribing for future analytical observations. This channel prioritizes process over persuasion. Always engage thoughtfully if this perspective resonates. Comments are welcome when grounded in evidence. Thank you for supporting disciplined market analysis.